Assalamualaikum and hi, my name is Adil Hakimi. My ID number is SIT 2411001. Today, I want to present about my question, which is question 1. Define inflation and describe its main types of inflation. Support your explanation with relevant example from the CT article and from current economic issues. So what is inflation? Inflation means a general increased price in the economy, which has the effect of reducing the purchasing power of money over time. This means that consumer only can afford to buy fewer goods and services with the same amount of money than before. Inflation has been shown to affect daily spending, saving, and overall economic stability. Here I got three main types of inflation. First, demand pull inflation occurs when consumer demand exceeds the economic's capacity to produce goods and services. This occurs can aggregate demand in the economy exceeds aggregate supply. It often occurs in growing economy where consumer and business are spending more. For example, the surge in spending after the pandemic, when consumers were able to resume normal activity, it increased purchases. Additionally, if private consumption in Malaysia increased significantly due to higher wages or government stimulus, it could cause demand pull inflation. The second type of inflation is cost push inflation, triggered by rising production costs such as wages, raw material, and energy. This type raise when production costs increase, causing producer to raise price to maintain profit margins. A relevant example for recent data in the article is 20.1% increase in diesel price following the government fuel subsidy in June 2024. Even if the government implements mitigation measurements, a sudden increase in input costs can contribute to cost push inflation. Last type of inflation is imported inflation. Occurs when the price of imported goods increase, often due to currency depreciation or rising global commodity price. Malaysia is particularly vulnerable due to its reliance on import for essential goods such as fuel and food. BNM has warned the external development such as disruption in global supply chains or rising global commodity price could pose upside risk to Malaysia inflation outlook.
Hello everyone, my name is Macroeconomic SIT 24110007 from Debate 2A, and I will be presenting question number 2. Question number 2. How does the government get price data of Consumer Price Index (CPI) to measure inflation? According to Malaysia's Department of Statistics (DOSM), the government obtains price data of Consumer Price Index (CPI) to measure inflation by measuring the cost of purchasing a constant basket of goods and services by households in a specific time period. Regular price collection can either be weekly, monthly, or quarterly, depending on the items. Longer time periods are used for items that generally don't fluctuate much in its price, such as diesel, vehicle insurance, and food and beverages. So, how is this data collected? Price data are collected from a wide range of outlets, including retailers, supermarkets, department stores, websites, government authorities, energy providers, and real estate agents. This ensures that the prices reflect what consumers actually pay in different sectors. Here, data collectors visit or contact thousands of retail stores, service establishments, rental units, and other service providers to record prices of about 80,000 items monthly. These items are carefully selected to represent a fixed basket of goods and services that consumers commonly purchase. The basket of goods and services is determined based on consumer expenditure surveys, This shows how much and on what households spend their income. Items that consumers spend more on have a larger weight in the CPI calculation. Its continuation: for some items, the government uses scanning data from supermarkets or transaction data from third parties to capture prices more frequently and accurately. For example, gasoline prices may be collected from secondary sources rather than going in-person visits. The CPI price data collection is continuous throughout the month, divided into three roughly 10-day pricing periods to capture price changes accurately over time. Here we have a graph for headline food inflation trend. Malaysia's headline and food inflation trend from January 2011 to May 2022. Here is an example of how to calculate inflation. We are going to calculate diesel inflation here. Firstly, diesel is categorized under the transport group in the CPI basket. Then, prices for diesel are collected weekly from a representative sample of petrol stations across the country. To ensure consistency, the Department of Statistics Malaysia (DOSM) uses the same fuel grade and quantity. Subsidies considerations are taken in as diesel prices are often subsidized or regulated. This CPI actually reflects the actual retail price paid by customers, including government interventions. Diesel inflation impact depends on its weightage, which reflects how much households typically spend on it. Lastly, price changes are compared to base year using the last period's formula, which holds quantities constant to isolate price effects.
Okay, Assalamualaikum and hi everyone. My name is Muhammad Haris bin Muhammad Sani. ID number SIT 24110009. So today I will be presenting about economic group presentation for question 3. So let's begin. So for question 3, the question asks, discuss the relevant example how inflation impact on individuals, society welfare and standard of living in Malaysia. Okay, so let's move on to the answer. So inflation in Malaysia project to average between 2.0% and 3.5% in 2025. Can have wide-ranging effects on individuals, society's welfare, and the overall standard of living. So the first is impact on individuals. Inflation erodes purchasing power, meaning the same amount of money buys fewer goods and services. Said Canton, 2023. For example, if food and beverage prices rise by 1.6% as not in Q3 2024, a family that used to spend 500 ringgit monthly on groceries, while groceries may now need 508 ringgit to maintain the same consumption. Well, this may seem small, but it accumulates over time and hits lower income household harder, especially when essential like diesel spike by 20.1%. So additionally, inflation can affect savings. If the interest earned on savings is lower than the inflation rate, the real value of those savings decline and discouraging long-term financial planning. So as you can see, the curve that relates to the question. So let's move on to the second is impact on society's welfare. Inflation can widen inequality. A study analyzing income inequality in Malaysia from 1990 to 2019 found that inflation rate have both long run and short run relationship with income inequality and indicating said Muhammad 2024. So wealthier individual may hedge against inflation through investment, but lower income groups often rely on fixed wages and have limited financial buffers. So this disparity can lead to social stress and reduce access to quality healthcare, education and housing. To be example, in rural areas like part of Sabah and Sarawak, public transportation is limited or non-existent. So many residents rely on personal vehicles to commute to work, access healthcare or send children to school. For instance, rising vehicle insurance costs up to 0.8% and transportation expenses can disproportionately affect rural Malaysians who rely on personal vehicles due to limited public transport option. So for the third impact on standard of living, a sustained rise in the cost of living without a corresponding increase in wages can lower the standard of living. While Budget 2025 includes a minimum wage policy to support private consumption, its inflationary impact is expected to be limited. However, if wage growth lags behind inflation, households may cut back on discretionary spending, affecting lifestyle and well-being. So to be example, in cities like Kuala Lumpur, where house prices exceed RM 480,000 ringgit, many middle-income families struggle to afford homes, with wages growing slower than inflation. Rising living costs force them to cut back on non-essential or live further from the city, leading to longer commutes and lower quality of life. Moreover, inflation can influence housing affordability as prices rise, especially in urban centres like Kuala Lumpur. Middle-income families may struggle to own homes, leading to overcrowding or longer commutes. In conclusion, while moderate inflation is a sign of growing economy, unchecked or uneven inflation can strain household budgets, deepen inequality and reduce overall quality of life. Malaysia's targeted subsidies and enforcement measures aim to cushion this effect, but vigilance is key to ensuring that growth remains inclusive. So that's all from me. Thank you.
Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad bin Abdul Basit. ID number SIT 24110008. My question today will be question number 4, which is, with supporting data, explain the policy measures the government agency or non-government organisation that could be effective in controlling rising inflation in Malaysia based on the article. First is we have the government policy. As stated in the article, the government said that they are focusing on a few factors or policies to help reduce the inflation rate in Malaysia's economy. First of all, Bank Negara Malaysia's Governor Datuk Seri Abdul Rashid Ghafur stated that they are implementing the targeted RON 95 fuel subsidies instead of using the blanket subsidies. What is the blanket subsidy method? It is a subsidy that is for all consumers, no matter the income level. So who are the targeted groups? The targeted groups is the lower income groups or consumers. So as you can see, this will ensure that only the lower income groups or netizen gets the benefit. So this will automatically reduce the government spending. Secondly, is expanded scope of the sales and service tax, SST. This means that more goods and services will be taxed. So in a situation where consumer wants to buy goods or services, they will have to pay more because of the taxation policies. This will also help to reduce the consumer spendings and also aggregate demands. This will help to decrease the consumer income and increase the government revenue. This in a way will help the government to control the inflation rate. Lastly is implementing a minimum wage increase. This concept applies to the ways to reduce inflation rate in Malaysia because as stated in the article, in terms of inflation, we believe the impact will be rather limited. We have seen in the previous increment in minimum wage, the impact on inflation has been rather small. So the statement that was given is an analysis of the previous year's data. So they escalated all the behavior using the previous data. Means that increasing minimum wage won't really have a bad impact on our economy. Next is we have the non-government policy, or I can say as a suggestion. So first is they can run an awareness campaign for the consumers and help the netizen make more smart choices in buying essential goods or services, and also to inform or report about the price gouging to help prevent artificial inflation. Artificial inflation is a fake price increase that is made by the business in order to generate more revenue. Secondly, supporting local production. By supporting local products, we can slowly not rely on imported goods that can be pricey from time to time. This will help from increasing essential imported goods price. Lastly, is we have employees skill training. With skilled and trained employees, the output of one business will increase and business can produce more without increasing labor number, which will increase the cost of production and later on will lead to increase the goods or services price. That's all from me. Thank you.